Good morning, everyone. This is Trina. I'm a Life Sales Director here at IMES, and I am with Charles King today. He's going to be presenting SecureCare with Securian. The purpose of the webinar today is to make you aware that this is a good alternate option for traditional LTC, and he'll go over why that is. He'll go over some of the benefits for using the linked benefit product versus a traditional LTC, and he'll also go over some taxation points so that it's very helpful to those of you who do not know. And at the end of the webinar, there'll be a question-answer session. So everybody, keep your questions, and we'll answer them at the end. If there's something that you want to ask immediately, you can put your questions in, and I'll read them off at the end. For those of you that are new and this is your first time joining a webinar with us, and you have additional questions about what we offer here, please feel free to shoot me an email at trina@imesinc.com, or you can reach out to any of the marketers, annuity or life, and we can give you some additional information. But we will go over a few slides, intro slides, so that if you're new to IMES, you'll learn a little bit about us today. So here at IMES, we offer a few ways that can help you make even more money other than policies being issued. We have some programs to help you make some additional money because we'd like to help you succeed. So first, we have our new producer builders. So you can grow your production, and in the first 180 days, this is the referred producer program, and in my opinion, there's nothing better than referring someone to do business here with us at IMES. And we'd like to thank you and return the favor for that by giving you a referred producer bonus. So how this works is we're going to immediately send out a $50 one-time bonus for the referred agent, and then Steve's going to write you a check quarterly for any life and annuity business that producers write through IMES. And it's not going to cut out anything from their compensation for that business. We're not sharing their compensation with you. We are giving it to you from our bucket of money here at IMES. So that's just a thank you, one way that we thank you for referring someone to IMES. We have IMES Business Builders, the Referred Producer Program, which we just talked about. And then we have marketing reimbursement. So we pay $100 marketing reimbursement for every $100,000 of premium on indexed annuity, $200 per $100,000 of premium for single premium life, and $200 per $10,000 of premium in life target. You can use the marketing reimbursements on several different things here. We have a creative team that's amazing, and they can help you with that marketing reimbursement. We can get with them and go over what can and cannot be used for the reimbursement. We do provide back office support. We want to help you work smarter, not harder. So we have business building tools and resources on our IMES website. If you haven't been out there and looked around, please go to imesinc.com and check it out. There's a lot of resources out there that can help you grow and help your business grow. We have case design assistance. We have forms out there. We have support from submission to commission. We help you design life and annuity quotes. We help you work a design that's a combination of life and annuity quotes, whatever best meets the needs of the client. So again, the IMES website is www.imesinc.com, and you can go out there, and one of my favorite resources is our sales resource library. So if you can't locate that, please reach out to someone here at IMES, and we'll be happy to walk you through it. We have an LTC product grid, annuity grid. We have forms out there. It's accessible 24 hours a day, 7 days a week. Just go out and check it out. We also have access to Firelight through the IMS website, and it's mostly annuity carriers, but there are some life carriers out there that you can submit applications on Firelight. You do need to register through the IMS website in order to submit the applications through there, but it's a pretty simple process. So if you haven't registered for Firelight, go ahead and get out there and register for it. Our creative team has turnkey solutions, they have agency solutions, they have digital solutions. A lot of our competitors out there, they contract out or use outside vendors for their creative marketing. We have these guys in-house, and they're an amazing team. They can do just about anything. So it's something that is beneficial for us to have it in-house, and we can get things done quickly and turned around quickly. We also offer a retirement analyzer. It's a software developed by agents for agents. If you have never heard of Retirement Analyzer or seen an overview, reach out to an annuity marketer here, and they can go through that with you. It's a very detailed program to help work out the client's retirement planning. We have an IMS Wealth Management team, so we literally have everything internal. We have MedSup, we have single premium life, we have annuity, we have long-term care, we have disability, we have group options, and we have the IMS Wealth Management. That just rounds out our whole portfolio that we have offer, and it can have everyone under the same umbrella for an advisor who doesn't want to be with multiple IMOs. And we can get you connected with Duncan if you are interested in hearing a little more about IMS Wealth Management. He does a great job of going through the overview and explaining everything. Just reach out to either myself or just call into IMS in general and ask to get connected with Duncan. We offer several two-day trainings for Life and Annuity Academy. It goes over sales ideas and strategies from top producers. It goes over turnkey seminar systems, large life case marketing, business insurance concepts, wealth transfers, sales software tools, and it's really good, informative training. And the best part is it's paid for by us and the carrier and not out of your own pocket. We cover the cost. You register for it, and then the carrier that's hosting it, we get with the carrier, and we work out the number of seats and everything, and then we get you registered, pay for all of the stuff for you to come down, and it's just really good training that goes over a lot of things that could help you advance in your business. So some of the dates, we've already had our April Academy in Des Moines. It went really well. We have a June one coming up in Omaha, June 7th through the 9th. I believe there's still a few spots left. Unfortunately, we have to get all the flights booked by this week. So if you're interested, make sure you reach out today. We do have an Index Universal Life Academy coming up in July with North American. I believe the location has been determined to be in Chicago. I'm not sure if that's set in stone yet, but I heard it was going to be in Chicago. And in August 8th through the 10th, we're going to have an Index Universal Life Academy with Allianz in Minnesota. These will be more of sales concepts for life insurance. It will go over a deep dive into the carrier's product, but these concepts can be done with any carrier, and it doesn't have to be with these carriers in specific. If you like to use multiple carriers, then go ahead and sign up for one of these trainings, and let's go over some concepts together. We do offer trips, and if you qualify, the qualification period for this one has started in July of 22, but you have until December 23 to qualify. A couple of big annuities, and you'll be qualified and be able to go on the trip if you haven't written any yet. The top 20 get extension in the trip. So this is just one of many things that we provide with our advisors. Little nice area to chat with each other and learn from each other and have a good time. So if you have any questions, here are the names and email addresses for the life marketers here at IMES. The number is 800-255-5055, or you can reach out to Tony, Beth, or I, and we can help you with any of your life questions. And then we also have counterparts on the annuity team that if you have any questions, we can get with them and get everything you need taken care of. Follow us and like us on Facebook and LinkedIn, and get your questions ready for Charles. I'm going to go ahead and hand it over to Charles right now.
All right, thank you, Trina. Good morning,
You're
everybody.
Very welcome.
My name is Charles. I am your SecureCare consultant. I'm here to enjoy this moment with you. I'll only need about 30 minutes of your time or so. With me today is Lisa Spielman, another very awesome person. She'll be helping out with any questions that you may have once the presentation is done. With no further ado, here we go. But where we'll start, I'll give you a little history on who exactly we are. Securian Financial is the 6th largest insurance company in the nation. In 2020, we paid out $4.6 billion in benefits to customers. And we have $97.8 billion in assets under management, $1.4 trillion of life insurance that is in force, and over 21 million customers across North America. As you can see here, we have a very strong rating across the board. Our consistently high ratings come from independent rating agencies such as Standards & Poor's. As you can see, we have a 96 Comdex rating, and really focus on the stability and integrity of our long-term care and commitment to maintaining a strong balance sheet. I'm gonna skip a couple of slides here. All right. Before we talk about SecureCare 3's newest features, I want to go over the guaranteed benefits that come with every SecureCare 3 policy. The first is if a client needs care, there's a guaranteed cash indemnity benefit they can use however they choose. So no matter if they want informal care or whatever the case, there's no restrictions and there's no fine print. If the client dies before they use their long-term care benefit, then there is a death benefit equal to the face amount. Furthermore, if they do exhaust all of their benefits, there still is a guaranteed death benefit. And we'll get into that a little bit later. Now, if the client wants their money back, they can surrender their policy and get money back based on the return of premium option that they select. SecureCare 3 offers 3 return of premium options. This is new from SecureCare Universal Life. See, we're now allowing the clients to choose the protection that they select to be the best for their needs and wants. And if they do decide to go with a multi-pay policy, the 4th guarantee is there is a reduced paid up benefit. So if they stop making their payments, their premium is going to be adjusted to the level that they have, their face amount will be adjusted to the premium that they have paid. These 4 guarantees are at the heart of the SecureCare product line, so we've kept them largely the same. However, we've added some key additional enhancements to our to make everything a bit more flexible to fit the needs and make it easier for you to tailor it to your clients. So let's look at a couple of quick case studies and see exactly how SecureCare 3 really works. So let's say we've got a female, age 62, she's got a couples discount, non-tobacco, and she decides to get a $100,000 single pay policy with a 6-year benefit period, 3% compound inflation protection option, and a long-term care boost return of premium option. Because her top priority is maximizing the amount of money that she has available if she needs care. The first 2 years of the client's benefit period will come from the acceleration of the long-term care agreement, and the next 4 years will come from the extension of the long-term care benefit, given the total benefit period being of 6 years, and a very generous pool, as you can see here, from day one. Now, because of the long-term care inflation protection agreement, the client's benefit amount actually grows by 3% compound interest each year, dated to the contract. So by age 85, that benefit grows exponentially. And you can see those values down here where it says age 85. Ultimately, SecureCare 3 combines the benefits of long-term care protection with the guarantees of life insurance and can be a powerful long-term care solution. So let's look at some of the key features SecureCare 3 has to offer. What's new with SecureCare 3, as you can see, we have simplified product design, 3 return of premium options, enhanced premium payment flexibility, and optional premium waiver agreements. Let's dive into it a bit more. So with a simplified product design, SecureCare UL versus SecureCare 3, SecureCare 3 switching from the universal life to a non-participating whole life chassis, meaning there is not a dividend paid. This change to the whole life simplifies the product and creates more consistency across plan designs. The acceleration for long-term care agreement is automatically included in the policy, but the acceleration period will always be 2 years instead of being 2 or 3 years. The extension of the long-term care agreement is now automatically included with every policy, and it extends the benefit by 2 up to 6 years. This change helps make the product easier to explain, because instead of having to explain how the extension of long-term care benefit works and why one might want to include it, the conversation can be more focused on how long do they want to receive that benefit. SecureCare 3's total long-term care benefit period is between 4 and 8 years, compared to SecureCare UL's of 2 and 7. SecureCare 3 offers 3 return of premiums, as I mentioned before. Now we'll get a bit deeper into it. And these allow the clients to choose the protection that makes the most sense to them. The first return of premium option is, as you can see here, the vesting option, which offers 100% premium refund if they cancel their policy. Now that is subject to the vesting schedule. The vesting schedule for SecureCare 3 is the same as the vesting schedule was for SecureCare UL. So for a single pay policy, the policy would be fully vested beginning in year 6. And for multi-pay policies, the premiums will be fully vested after the last premium scheduled years paid. So a 5-pay would be vested beginning in year 6, 7 in year 8, 10 in year 11, and so on, with 15 years being the maximum for the premium pay option. The 75% return of premium option offers a 75% return of premium from day one. So if the client decides they want to back out they're guaranteed 75% of their premium, whether that's day 1 or day 900. And lastly, we have the long-term care boost option, which offers a return of premium equivalent to the policy's guaranteed cash value at the time of surrender, but it maximizes the long-term care benefit. Now, by offering the multiple return of premium options, SecureCare 3 allows you to tailor the policy to meet your client's unique needs. It's important to note, though, the return of premium option the client selects impacts the policy's surrender value, long-term care benefit, and death benefit, and the option cannot be changed once the policy has been issued and is in force. So make sure that they've got the right return of premium from the beginning. To understand how the different return of premium options can impact the amount of long-term care coverage a policy provides, I'm going to give you a few hypothetical examples that we can go over. In each example, we're going to be looking at single pay premium of $100,000 with a 6-year benefit and 3% compound inflation option. Here we have a female, age 68. The vesting option would offer 100% return of premium once her vesting schedule is met, and it would give her just under $400,000 in long-term care benefit at the age of 85. The 75% option, it would increase the long-term care benefit above the vesting schedule option at about 20%. If she chose to cancel her policy at any time, she will get 75% of her premiums paid. And finally, we've got the long-term care boost option, which is designed to maximize long-term care benefit. As you see here, it gives her the most long-term benefit, the largest long-term benefit pool by approximately 25 to 28%. Now, if she decided to cancel her policy, she'd get the guaranteed cash value, as we discussed before. And depending on the client's needs, you can help her choose the protection that matters most to her. If her top priority is long-term care protection and maintaining the full value of her premium dollars, then the vesting return premium is probably going to be best for her. Alternatively, if she wants enhanced long-term care protection, if she wants long-term care enhanced protection, she'd have the ability to get her money back if the need be at 75%. Maybe that would be the best option for her. Or lastly, we've got the long-term care boost. For your clients that's main goal is getting the most long-term care protection possible for the least amount of money, this is definitely the way to go. And as you can see, there is a substantial difference between the vesting and long-term care boost options as far as the benefit dollars paid. Let's quickly look at another example with a male, 73. Again, according to his individual needs, you can help him choose the best ROP. He can either maximize his protecting his premium dollars or maximize leveraging them. Choice is up to theirs, and it's easy for you to depict for them. SecureCare 3 offers premium payment flexibility. With SecureCare UL, multi-pay policies had to be paid in fixed level payments. That meant if the client had a certificate of deposit or some other source of funds they wanted to use for their premium, they couldn't apply it as a lump sum to the first premium unless they were able to match it with each subsequent year. With SecureCare 3, the client's able to pay a larger initial premium amount as their first premium and then pay a fixed level payment thereafter. Paying a large initial premium, paying a larger premium up front decreases the premium payments after that, which might help open the door to additional premium funding sources. Let's see here, premium waiver option. So SecureCare 3 offers an optional premium waiver agreement for multi-pay policies. This agreement ensures that if the client goes on claim while they're still paying for their policies, Securian will cover the cost of their premium payments. So both the life and the long-term care portion of the premium for as long as they're receiving the benefit. Now, this might help make clients more comfortable with longer premium schedules. Let's see here. So those are the biggest new features for SecureCare 3. Simplified, excuse me, simplified product design that includes whole life chassis, a 2-year acceleration for long-term care agreement, the extension of long-term care agreement automatically included in each policy, and long-term benefit periods that last 4 to 8 years. 3 return of premium options, enhanced premium payment flexibility that allows clients to pay a larger lump sum as their initial premium payment, and the optional premium waiver agreement. Taken together, these features ensure that SecureCare 3 has the flexibility you need to custom build a policy for your client's unique needs. So what are the product features? Well, here's the product features that aren't changing. We still have a guaranteed cash indemnity long-term care benefit that clients can use however they choose. For example, let's say they could use their benefit to help cover assisted living expenses or modify their home to make it safer and easier to navigate for somebody that's met 2 of the 6 ADLs. Or they could pay a loved one for help or save the benefit and use it down the road. The choice is up to them. That's the point. Their monthly benefit is theirs. It does go to their bank account. So however they see fit, with no need to save receipts or get expenses pre-approved, they get this cash indemnity benefit, and it helps your client's policy. It helps make your client's policy look more realistic as to what reality is. And as I said before, there is a guaranteed death benefit, which is going to be, even if they completely exhaust their long-term care benefit, there's still going to be a minimum guaranteed death benefit of the lesser of $10,000 or 10% of the policy's original face amount. So an example, $100,000 is $10,000. If it's $50,000, then they'll get 5. And either way it goes, that's going to be guaranteed at the minimum. There's also the reduced paid up benefit. So if the client can no longer afford their premium, so instead of losing their policy, they can simply get a policy with a smaller benefit amount based on the premiums that they've already paid. And if an inflation agreement was added to the policy, the reduced paid up benefit will continue to increase at that rate. All right. Let's see here. And there is multiple premium options, single, 5, 7, 10, or 15 years. And the client can choose which pay premium monthly mode is best for them. There is a monthly, a semi-annually, quarterly, and an annually option. The optional inflation protection of 3% and 5%, both simple and compound. It lets the client choose from the 4 options at which rate their benefit will increase. And their inflation benefit will continue to grow even after a claim is initiated. It's a very important point. It does not stop growing, even while they're on claim. The SecureCare 3 has the same premium design as the SecureCare UL, which means there may be potential tax advantages for certain clients. Individuals may be able to use dollars from their HSA to fund their SecureCare 3 policy. and business owners may be able to deduct portions of their long-term care premiums from their taxes. And we have a very robust international policy. If a client is abroad, the total benefit pool of their policy is still available to them, and they can receive up to 50% of their monthly maximum. I'm sorry, a maximum of 50% of their guaranteed benefit with no facility requirement. And if they're in the US, they can get 100% of their monthly benefit. So let's say the client's policy had a 6-year benefit period and they were living abroad. They'd be eligible for 50% of their policy, which would extend their policy period from 6 years to 12. So basically it's 50% of the benefit for double the time. Best international policy I've seen. We also have the 90-day elimination period. Most important factor with this is, one, it is strictly a 90-day elimination period. It is non-negotiable. However, that period starts from the date that your client is certified chronically ill. So not when the claim is made, all right? If a client submitted a claim 90 days after they were diagnosed, the claim is already approved. They would have already satisfied that 90-day elimination period, meaning they're getting their benefit immediately. And inside of that 90-day elimination period, there are some benefits as well that do not impact your long-term care benefits. The first of that is there's a caregiver training stipend of $1,000. So if the client wants to have their loved one, child, neighbor, whoever take care of them, there's $1,000 to get them the proper training that they'll need to get them through that 90-day elimination period, as well as a $5,000 benefit for home modification. The terminal illness benefit, let's see here, the terminal illness benefit payments a portion of the face amount that will pay in advance if the insured has a is certified as having a terminal illness, i.e. they are diagnosed with an illness or in an accident that causes them to have 12 months or less life expectancy. Of course, by a licensed health practitioner. So as you've come to expect with the SecureCare product line, SecureCare 3 offers very competitive pricing, especially with our repricing. Our pricing is strong across the board, but you'll tend to find our sweet spots are in policies with a 6-year benefit period, are a single pay, 5 pay, or 10 pay, or have a 3% compound inflation option. So let's take a look at how we stack up against our biggest or our key competitors. Here, before we get into this into this example, I want to make a quick note that all the following scenarios are calculated with the non-tobacco and couples discount. With that, the SecureCare 3 benefit amount shown here were calculated for a female age 60 who purchased a $100,000 single pay policy with a 6-year long-term care benefit period, 3% compound inflation protection, and a long-term care boost return of premium option. As you can see here, SecureCare 3 offers the largest long-term care benefit pool in this scenario with a generous benefit starting day one. I'll give you a moment to look over that. All right.
Charles, while they're looking over that, could I point out that to get the couples discount, you just have to be legally married in the eyes of your state to get that discount. Both spouses do not require to submit an application.
Absolutely great point. Thank you for pointing that out, Trina. You are absolutely right. To receive the couples discount, it is not required that both parties apply. So if they're married, only the husband wants to get a policy, only the wife, whatever, they're going to get that discount as long as their state recognizes their partnership. They are eligible for that discount. Where am I here? So we're looking at a competitive comparison on a male age 60 with a $100,000 single pay premium, the 6-year long-term care benefit, the long-term care boost, and 3% compound inflation. As you can see, that's a very generous benefit at day one. That's substantial. Excuse me. Here we have a female age 60 on a 10-pay, $10,000 a year, 6-year benefit period, long-term care boost, and 3% compound inflation. Very generous from day one, as you can see. Approximately 25% or so above our competition. And here we have a male age 60 with the same agenda, 10 years, $10,000, 6-year benefit period, long-term care boost, and the 3% compound inflation. Again, you can see that the day one benefits are substantial. Total long-term care pool it speaks for itself. I'll give you a moment to look that over. All right. Here we have another male, age 60, $100,000 total premium, 6-year benefit period, long-term care boost, and 3% compound inflation. So on this slide, we're solving for the total long-term care benefit pool based on that $100,000 premium. As you see, given the payment schedule, it's still going to be very healthy. Give you another moment to look that over. All right. In this example, we're solving for the total amount of premium this client would have to pay for a $4,000 monthly benefit. I'm sorry, $5,000 monthly benefit. As you can see, single pay premium, age 60, 6-year benefit period with boost and 3% compound inflation, $5,000 monthly benefit, $77,053 for the single pay, $85,775 for 5-pay, and so on. All right. So the application and underwriting process for SecureCare 3 is largely the same as it was for the SecureCare UL. The application and underwriting process, it does not require parameds or exams. It is a tele-interview only. And attendance, the APS for cause only. What's going to happen is the client will get a tele-interview. If they are age 56 or older, they are subject to a cognitive evaluation. And yeah, it's really that simple.
We have a pre-screen form that I can get out to everybody after the webinar, and you can send that back into IMS. We can send it over to their pre-screen department. They will look at it, pre-screen it, send it back with a pre-screen number that you can add to the application when it's submitted, and then they'll go back and refer to the pre-screen so that you don't have to start from the beginning of the process. I think you guys are the only ones that offer that.
Thank you very kindly. And also, we do have it. I'll make sure you have the impairment guide as well, in case any of your producers would like the impairment guide. Again, with the process, and thank you for that. Again, with the process, you can submit application via paper or e-app. Once you've submitted the application, again, SecureCare 3 is going to streamline the underwriting process. Where are we here? Let's see, no parameds or exams. It's only the tele-interview and the cognitive assessment. Oh, and the MIB, and there is a MIB and prescription check. That would also be very helpful. The pre-screen checklist would be very helpful for that specifically. The attending physician statement is only ordered if triggered during that tele-interview. If the application is approved, SecureCare 3 has e-delivery. Let's see here. Yeah, and so this is a map of the states that SecureCare 3 is currently approved. Repricing going on throughout the nation. We'll get some information regarding that. The states outside of the compact that are changing out to you once this is completed. And ultimately, SecureCare 3 has all the things you love about its predecessor, plus more flexibility. And yeah, be sure to check out Securian.com/SecureCare for any updated marketing materials. Thank you for joining me. I'll leave this open now for any questions that may be.
Well, I do have a few questions that have been submitted, and while we're going through the questions, I'm going to go ahead and put the poll questions up for everyone on the webinar to complete. The first one is, would you like to get contracted with Securian? If can you guys see that poll question? Not sure if you guys can see that. And the first question we have is, how are the rates compared to, sorry, the screen moved. How are the rates versus traditional long-term care? So that's a very good question. And Charles, I don't know if you want to answer that or if you'd like me to take that question.
You can take it if you like.
Okay. The traditional long-term care, you can pay the premiums monthly for as long as you are alive. You don't have to pay a short pay. However, it is better to pay the short pay with the higher rates up front, because traditional long-term care is going to take those rates that they issued you with in the beginning, and I can't say it's a regular premium increase, or I don't know how they determine when to increase the premiums, but I have seen over the last 8 years that the premiums do increase, and it's not just by 5 or 10%. I have seen one that increased the premiums, and it's different percents in different states. And I think this one was California, and it was 108%. Texas, I saw 101% increase. So people weren't able to continue to pay the premiums, and they did not choose a paid up option at an additional cost included in their policy. So they just weren't able to pay the premiums, and the policy lapsed, and they had nothing when it came time to use the long-term care benefits when they needed them. Traditional also does not offer a residual death benefit, and if you don't use the long-term care at all, then it's just like a term policy when you didn't pass during the term period. You get nothing, your beneficiaries get nothing, so the money just went to waste. In the linked benefit products like SecureCare, the money does not go to waste. It goes towards your your long-term care needs or a death benefit payout to your loved ones. Sorry, I know that was a long answer for that.
But it was absolutely accurate. Thank you very kindly, Trina.
Yeah.
And again, just to reiterate, the biggest difference is they will not lose their policy. They're guaranteed their policy. They pay for it, they get it, it's theirs, period. So if they end up going 15 pay and in year 8 or year 9 decide or die or whatever, they decide they can't afford to pay their premium any longer, then their benefit is going to be reduced to the amount that they had paid, meaning they still have their benefit.
Okay, sorry about that, guys. I was told you couldn't see the poll questions. I hope you can see the first poll question now, which is, would you like to get contracted with Securian? So if you could choose yes or no, I'll leave that up for a few minutes for everyone to be able to see that and answer the question. The next question, Charles, is, can we do a 2-minute recap as if they would present it to the client if we can? Do you have a client presentation material that we could send the advisors on presenting it to a client?
Absolutely, we absolutely do. I think the best tool for this is gonna be the client facing brochure. Where the key is it'll highlight a few points for you regarding the biggest benefits, i.e. the reduced paid up benefit, the flexibility with the premium payments. We also do have client presentation for the reps as well. Be happy to set that up for you when's convenient. Yeah, we definitely have that ability for you.
Okay. Next question is, can you go over the premium and what's considered a long-term care premium? Because I know only a portion of it is considered long-term care and deductible.
I can, yes. Give me just a moment here. I'm gonna actually pull up a fictitious person, i.e. John or Jane Doe here, and I'm gonna. Can I still share my screen with you?
Give me 1 second. Let me get this poll question closed out. We're collecting responses right now, and then I need to make sure to give you control back to bring your screen back up.
Very good.
Okay. Oh, it says that you are still in charge of the presenting, so give me 1 more minute, and I will close out this poll question. I'll ask the third one when we're done.
No problem.
Okay. All righty, I closed out the poll question. So if you want to bring your screen back up.
Bear with me just 1 moment. Okay. All right. Can you see my screen okay?
Yes.
Excellent. So here we have John Doe. A good depiction of how long-term care benefit is going to be broken down in that premium payment is right here. You see in the event, and bear in mind this is just a random something I threw together to give you more food for thought here. It's a $100,000 premium paid over 15 years. And of that first premium, total first year premium is going to be $6,667. And then in the first year premium breakdown, you'll see how much goes towards the face value. And these portions here, oh, I can't highlight that, but these three portions here, the acceleration, the extension, and the long-term care inflation protection agreement, these numbers are what's going to be subject to tax deductibility. Again, I would strongly encourage to consult a tax professional, as I am not a tax professional. So what I can tell you is that these are the numbers that you're going to want to focus on with that regard.
Now, what if it's a 1035 exchange?
That's an excellent question. $1035, I want to say what goes in 1035 is not tax deductible. Let me see. Lisa, do you have any extra input on that one?
I believe I have to give her control for her to speak.
Gotcha.
I think she can speak now if she unmutes.
Okay, great. So it looks like they will, they would follow the 1035 exchange rules, i.e. it is not tax deductible.
Okay, thank you for that. One question was, is it available in New York? I believe we went over that, but could you show that state availability chart again?
Absolutely. Give me just one moment here. Get this going.
Sorry, I've got you hopping all over the place.
That's quite all right. Trust me. If this is the worst that happens, I'd say it's a magnificent day. Can you see my screen okay?
Not yet.
Oh, sorry. There we are.
There we go.
Yep. So unfortunately, there is no policy availability in New York. With that, I do want to point out that there are some exceptions to the rule, if you will. Provided a New York resident has residency in a state that is approved, or a business with which is domiciled in another state, they can use that.
That's good to know. Also, the SecureCare UL, there's 3 states, it looks like, that's still using the UL chassis for the long-term care. And you might have said this during the webinar. Oh, there's 4? Oh, yeah, I see the other state there. It's tiny. So those states, are they going to be converted over to the SecureCare 3 at any point?
So excellent question. We actually, as of May 5th, have SecureCare 3 approved in North Dakota, South Dakota, and Washington, D.C. We don't have a release schedule yet. We're still waiting on everything else to finish being finalized, but it is approved in those states.
Okay, perfect. Now, is there training on the Securian website? Is there a link for the advisors?
Absolutely. At the Securian.com / I'm sorry, if they go to advisor.securian.com, there is that is the advisor page. There is a multitude of videos that they can watch inside of the literature library, as well as PDFs if they want to read, if they choose to read instead of watch. Excuse me. But there is no product specific training because no product specific training is required.
Okay, except for the state required LTC training?
Correct.
Okay. It looks like the person that asked us to repeat the vesting schedule has left, but I'm going to go ahead and ask you to repeat it again for everyone. Can you repeat the vesting
Absolutely.
tie schedule for the single pay and the multi-pay scenario?
Absolutely. So the way the vesting schedule works is it is with the single pay, day one of year 6, the client can receive 100% of their premium. Same and likewise for the 5 pay. In a 7 pay scenario, it would be day one of year 8. With a 10 pay scenario, it'd be day one of year 11. And with the vesting schedule, it does start at 80% in year 1, regardless of the years selected to pay the premium. And another example, with the 15 pay, they would be eligible for 100% at day 1 of year 16. So
Okay.
in the long and short of it, it's basically the following year after the 5th year, excuse me, the following year after the last year of the premium that's paid. That's when 100% is available.
And that information is spelled out in the product highlights. I will make sure to get that out to everyone, so you'll have a copy of the vesting schedule on
Excellent
hand. It looks like that's all the questions I have. I do have one more poll question. And that question is, would this product meet the needs of any of your clients? If so, please mark yes, and your life marketer will reach out to you to work with you on that case design. We can, like he said, it's very customizable. We can customize it. Whatever benefit is more important to your client, we can lean more towards that benefit and the customization. For example, they want more long-term care, then they care about the return of premium, then we would use that LTC boost. Or if they're very concerned about the long-term care, we would use the vest or the return of premium. We would use the vesting that gets you 100% after so many years. So, I mean, keep those things in mind whenever you are requesting a case design for a client, so that we can make sure that we get it designed exactly for your client's comforts and needs. So if there's any more questions, you could please submit those now. And if not, we'll be wrapping the webinar up. And Charles and Lisa, thank you so much for joining us today and working with us on this webinar. And I hope to be reaching out with tons of questions when we start getting requests for people's case design.
Awesome.
Thank you all for joining us here.
Lisa, it has been having a little bit of issue with her mic, but she did emphasize to make sure you knew. She said thank you. So we both thank you very kindly for having us, and thank you for your time. Wish you all the very best, and to the mothers, happy belated Mother's Day.
Well, thank you very much, and I'll be talking to you soon, Charles and Lisa.
Awesome. We'll look forward to it. You have a great rest of your day, and thanks for having us.
Thank you. Bye, everyone. Have a great rest of your day.